thank you, first of all, for our panelists for their time and making the effort to be here in person. We appreciate it. Me personally, I have a very good friendship with three of the panelists, one I have yet to get to know, so I'm biased about the backgrounds of people that have joined us here today when I say we're very lucky to have their time, to have their insights, to have their experience. Genuinely lucky. These are people who have global experience, regional experience, and experience for as long as this industry has actually even existed, which I know is a short while, but for us to navigate and understand the ins and outs from a personal level and a business level, highly valuable. So thank you to panelists for your time today. Really appreciate it. I think crypto, blockchain, Web3, very easy words to drop into sentences in conversation today. But the context is so vast, even in standalone, the key points I just mentioned, terminology or application. There's such an undefined space. All of us would like to know how it's going to affect us. One thing we know for sure is it's here to stay. I have a personal love-hate relationship with crypto, Web3, and blockchain, but in a world where everyone's talking about AI today, I can tell you this is very closely neck and neck and something we have to be educated on. It's here to stay. We have to participate. We will be affected in a personal capacity as well as a business capacity. So thank you again, our panelists, for your time. And with that, I hope you enjoy a wonderful session put together by Ty. So welcome to all of us zooming in and all of you who made it in person. Good evening.
So I think the good thing is there is a small group here in the room, and then we have a lot of audience who are either watching us live or would be watching it later in terms of playback. So I'll just do some opening comments, and then we will get to my fellow panelists. I will introduce the fellow panelists. Of course, I'll introduce them by name because you're able to go to LinkedIn and quickly look up their profiles if you want to, and that's probably the easiest way for us to be able to save time. So my name is Navin Gupta. I'm a managing director for Ripple in Middle East and Africa, and of course, just like all the views that I'm expressing are my own. Right? And I was in the Silicon Valley in 2001 when the crisis was happening, when the dot-com bubble was bursting in 2000 2001. Right? And there is one word that describes that particular time is chaos. Right? But what we saw from chaos is lots of companies emerging who were still building, who were focused on their business model, and these were the Google, the Facebooks, the Intuit, the Electronic Arts. Lots of companies will just continue to do what they were originally had planned to do. Right? So the great thing about forest fires, and exactly what we're experiencing, perhaps possibly in the crypto world today, is that now you will be able to separate men from boys. You will be able to see the trees that will be left standing, and these trees are the ones that are building business models for the future. Right? So with that as a background, I want to go to our panelists, and we go in the same sequence. To my left is Pranav Sharma. Pranav runs a fund based here in UAE. In fact, it's a global fund. So Pranav, starting with you, and it's the same question that I asked from Kokila and then from Hubert, is your initial thoughts on the state of crypto right now. And I think there are a lot of people in the audience here, and of course, people who are watching us on YouTube would be saying, hey, you know what, we have a skeptical view of crypto as we stand today. So would you like to just open in terms of what you see and your views on crypto as we stand today?
So first of all, absolute pleasure to be here, and good to know you. We'll catch up, subsequently. So let me see if I can break this question into some digestible parts. So when you say crypto, it is part of two things. One is the technology, and the second part is the financial aspect of it. Unfortunately, the financial aspect, or fortunately, the financial aspect captures imagination, and the volatility essentially, gets people's emotions, up and down, which is something I'll throw more light on. But the technology itself, in a single word, if I have to describe, then this technology is something that will permeate. It is already permeating. It is permeating in public sector applications, private sector applications, startup space, addressing white spaces, because fundamentally this is distributed cloud or this is also sort of getting married with, let's say, cloud computing in many ways, artificial intelligence. So there's a massive convergence of various technologies which is happening, and it is creating possibilities to solve for problems that as humanity we never thought we could solve. So this is very simple take on the technology itself. From an economic standpoint, the power of this technology is you can transmit data as well as value. And that means that if, let's say, value transfer can happen, then it also creates a situation wherein you need to create the right kind of mechanisms for that value transfer to happen. So, and definitely there is no perfection there. We have seen this in public markets, in startups, globally as well. So there are going to be missteps. So there are definitely missteps which are there. But let me just, throw a spotlight on the positives which I've experienced. So way back in 2016, when I discovered Bitcoin, I was writing off Bitcoin in my mind as if this is just another Ponzi. This is just another, you can say, speculative gaming token, because in the gamer community it was more famous than in any financial instrument. My brother, he did his MS from New York University, and he was back in India, and he was like, bhaiya, I mean, like in India we say brother is bhaiya, so you should check out Bitcoin. This is very interesting, and you will find something of meaning here. I was like, what are you talking about? I don't have time. So I work in financial services. I've seen all the products. I've been across private equity, structured finance, insurance, lending, broking, etc., and so on and so forth. I think I've seen it all. I don't think this is a financial asset. He's like, just read these 4 blogs. So I landed up reading these 4 blogs, and in my view, what emerged in my simple mind was that this is just a stepping stone to usher into a participative economy. And for me, that blew my mind, because ultimately the world from a social standpoint was becoming a lot more distributed, democratic. But at the same time, the relevant economic systems were a lot more containerized. In my own experience, when I looked at this from a financial services perspective, I saw the system broken horizontally and vertically. Horizontally, because did not see any collaboration between various verticals, whether it's mutual funds not talking to insurance. Of course there are regulatory aspects, but there are ways to work, and there were, of course, local egos and various other things, etc. And when I say vertically, it means that in the board conversation the customer was never in the line of sight. It was always about the product and monetizing the product. It was always about distribution, how much money the distribution will make, whether this is the right product or not. So put it very simply, I was like, if this is broken and there's a participative economy which is going to eventually emerge, then this will spawn off into a bundle of technology and a lot of innovation over a span of time. So that's how I landed up committing more time. So in that sense, whatever we see from an economic standpoint, which is happening here, is a manifestation of participative economy. And a lot of these, you can say, trials and tribulations that we are seeing right now are the missteps that happen, on the way. Unfortunately, very large, but these things, happen when you are discovering the appropriate paradigm that's socially, regulatory wise, and even from the perspective of proper use cases that completely fits in. And because this technology is so permeating, so pervasive, that it's very difficult for even regulators to proactively find the right kind of ways of governing. It's very hard on founders who when they put a product out there on in this entire space, it instantly becomes a global product. And at least I've not seen in Web2 space, fintech, enterprise SaaS, that suddenly you launch a product and you have to deal with everything which is global out there. So this is my personal views, that this will all find its own level and eventually create huge spaces of efficiency in the traditional finance. The technology itself will permeate into many more areas, and I can go on in terms of a list, and Navin has many more questions later on, so I'm very bullish.
And Pranav, thank you very much for that. And we will pick up on that, right? To say, hey, people in the room and people on YouTube, what should they look for to know that, yes, it's gaining ground, it's gaining groove, the shoots are coming out, and what should they watch out for? So that will be my subsequent question. But Kokila, same question to you, particularly from a regulatory perspective. You're a lawyer yourself, and in many cases you represent companies, you speak to regulators on a regular basis. Just your view in terms of the flux of the market right now, because I think there are a lot of people who are thinking about it, how to put their arms around it.
Thank you so much. It's always a pleasure to talk about this subject. Mainly because I would like to say, if, and I always say that if cryptocurrency was not called cryptocurrency, life would be a lot simpler for most of us here. Now, if we see most of the regulators, governments, lawyers, everybody has decided that we will drop the whole currency part of it, we'll drop the whole crypto part of it, and we will call them virtual assets. We will further develop on that, I'm sure, in another 5 to 6 years. But in the last 14, 15 years of the journey of this whole technology, and I was, I think, late to the party. I started practicing in this in the year 2017. But interestingly, my master's is in more cryptography law. So for me, this is something which has been there for a long time, but now we are seeing the whole evolution that happened after the 2001 chaos, and then this came into 2008. It is for sure something that's going to stay, mainly because the technology brings us into the space where we're already living. We cannot say this is the future. We are living in it. We are a Web3 economy. We are interactive. We are no longer just going online and saying, I want to read this and I want to stop there. Now I want to read this, I want to comment, I want to talk, I want to buy, I want to trade, I want to do everything in that space. Now, all that has been enabled only because of the technology that built up. And we started with blockchain initially, just talking in the financial sector. We've seen huge success use cases of it in supply chain. But what makes me really happy is that in 2018, when I was here in 5, and one of the startups from here that we started advising was doing something called organ donation on blockchain for the ministry. So it was a very prestigious project that as in 5 startups could start from here. So in 5 years, I've seen a lot of startups progressing in that space. So not just cryptos in the blockchain in the financial sector, but we've been part of the success journey of a lot of startups who used it in other sectors as well. Coming back to the cryptos now, lawyers, regulators take a lot of time in understanding. So I know this is going online, but I must say that lawyers have the risk appetite. So we are usually like, let's wait and see what's going to come out, how the court's going to look at it, what's the jurisprudence behind it, how is the society going to behave here, what is going to have the economic impact, what's going to be the political impact, and then the laws around it need to be worked. And law cannot just come out for something which maybe in future is going to come. Law is always going to be a couple of steps behind, what the society needs. So we are making a very fast progress in this space, and I'm very proud of especially the Middle Eastern region regulators who've been very open to. So if they have encouraged fintechs and startups to come and set up here and provide the ecosystem, they have worked simultaneously to make sure that the laws and the regulations around it is ready. So with ADGM taking the lead in it, and then followed by what Central Bank of Bahrain did it in Bahrain, and then we have now VARA, a Virtual Asset Regulatory Authority. A bespoke regulator has been set up. This is the first time globally we have a regulator who's just going to look at the regulations, frameworks, and laws for virtual asset service providers. That hasn't been tried anywhere, but we have a success story already here. So going back to, yes, it will stay. Now we have the legal support. What has happened, the chaos, and I always say chaos is the law of nature. And order is the call of the man. So order will come in, it is coming in, and not very soon, but in the coming decades, we'll see all of them going hand in glove. It's one of the
Thank you, Gupta. So if you see, of course, your own personal sense of what's going on, but also you see a very large number of companies in your portfolio as well, right? To say how they're dealing with it, how they're reacting, what are some of the things they are thinking about as this happens. So just your view, both at a personal level, given your significant experience, and then what are you seeing in your portfolio?
Yeah, thank you so much. So first of all, thank you to Thai Dubai for the invite. Appreciate to be here. I think every new technology is not asking for permission, but for forgiveness. That's the nature of the business. So you try things out, you disrupt, and eventually you try to backtrack. Depends on how the ecosystem and the regulation works out. You made the comparison before, Navin, with the dot-com times, and I remember that very well. Back in the days in the dot-com bubble, what happened, even in the subsequent years, was the disruption of industry sectors like telecommunications, commerce, gaming, these kind of things, which were not subject to regulation. Here we are now with crypto, we are touching a very sensible sector, which is financials. We're touching government interests, we're touching monetary markets. And I think this is the reason why there is so much pushback now happening, because the first couple of years of this industry, I remember when we got involved first in 2012, 13, 14, this was really about this libertarian view of Bitcoin. Then it was about the disruption of smart contract technologies, the removing of the middleman. At some points, I think the creator of the ICOs was the removing of VCs, which obviously turned out as being a very bold statement from today's perspective. And all that is really the typical phenomenon that you have in new technologies. And in the crypto space itself, I think what we've seen is a number of cycles so far. I mean, there was the first one was obviously the forking of Bitcoin, of Ethereum. Then there was the ICO craze in 2017, a huge bull market, a huge crash in late 18. Then the next cycle was coming up with the DeFi space, NFTs, metaverse, everything which we've seen until recently, and now the next crash coming. And everybody in the industry is now asking, okay, because the initial question was, what is the state of the industry? The question is, okay, when are we seeing the next cycle? What is going to be the next big thing? And I think the big difference to today compared to the previous, call it cycles of the last 10 years, is really the macro situation, right? So everything which happened in crypto almost since inception, let's call it of the more scalable view of crypto, 2016, 17, happened in a low interest environment with quantitative easing, with very little wars, disruption going on in the world. It was a really feel good time, A lot of money was printed, a lot of easy money was around. Alternative assets became uninteresting, so people took more risks, and crypto was the perfect, playground for a lot of investors. And we are not in the same environment anymore, right? So I doubt that the fact that in the past there have been all these cycles is a reason for concluding that there will be another cycle soon just because of the Bitcoin halving. I think this is a wrong view of things. Macro doesn't care about cycles, so from zooming in again from this very macro and global view, I believe that we are now in the phase of this industry where, it can become more mainstream because regulation is kicking in. I've been saying this even in 2018, that we need regulation for this industry to scale beyond the stage of a very geeky community, which is considerably small. I mean, there are roughly, I don't know, maybe 5 million developers in this industry around the world. Look at how many developers there are outside of the crypto space. So I think this step with regulational pushback is very important for the industry to grow up, to grow and mature, and for use cases to develop at scale. I wasn't specific now about our portfolio, but that's my global view of the industry.
So let's stay with you. Let's stay with the use cases, because I think it's a good way for us, and then we kind of talk about a few things as well. So definitely there will be a large number of use cases that get impacted by the technology, right, as it happens. But for people here in the room, they want to pace themselves. So what are some of the earlier use cases that you would see which will gain adoption, which will benefit the people in the room who are running tech companies, who are developers themselves? Would it be possible for you to just give, which will be the early and then what will be the medium-term use cases that people will see, which will envelop their life in some way? And this could be B2B, B2C, it doesn't matter.
Yeah, I mean, I think the ultimate promise of crypto early days was, and this is the killer app of crypto, is payments, right? So it's financial inclusions, is to make, access to banking system, to financial markets available for those who are currently unbanked. I think this would be, if crypto can fulfill that promise, it has solved a lot of problems. On the use case basis, I think we need to distinguish between use cases where the technology is being used and use cases where, let's say, financial aspects of crypto are becoming mainstream. The latter one obviously is subject to regulation because we have all these pushbacks that we discussed about. central bank digital currencies might be one of the things that we will see in that sphere. But when you just look at the mere application of blockchain technology as a protocol or as a base layer of an application, you find a lot of use cases, but most of these things are not attached to a token and are not traded on any exchange, right? So just one example is, look at the automotive industry, the whole supply chain tracking, the settling of certain stakeholder engagements and interactions via smart contracts, all these kind of things which are not necessarily visible for the end user because he doesn't care. The end user just wants the fast settlement. I think there are a lot of applications happening. And let's look here in Dubai. The whole land register from DLD is on a blockchain, at least a large part of it. So I think these are applications which are happening, but they are not happening and are not reflected in crypto prices because they have nothing to do with it, right? And then, of course, talking about consumer-facing products, if we look back to other technologies, other frontier technologies that we've seen in the past, like online business, mobile business, VR business, and now a blockchain business, gaming has always been one of the industries and sectors that spearhead evolution. Because as long as it's not regulated gambling, as long as it's really skill gaming, it's not regulated. It allows for a lot of interpretations. It has a very creative element to it. It's interactive, it's extremely community building, and I think that resonates a lot with crypto. So I believe that the gaming industry will be one of the first where crypto will have adoption at scale. And as we've seen in the past with, as I've said before, mobile, even internet in the past, from that new other sectors will then follow, and then we discuss obviously. I think my colleagues have different views on different sectors, but I think gaming is a very interesting one. With that, probably the media industry, everything where, for instance, YouTubers can have a bigger part of the pie by creating a circular economy where they get rewarded more directly from advertising, where users can also, get a reward from watching a video, for instance. These kind of industries where there is a community aspect, so creativity involved, I think they will benefit first. The financial side, I think it's very much depending on the regulatory environment, and there is a lot of pushback yet.
Hubert, thank you very much for that. So a quick show of hands in the room. How many of you are gamers or play games actively, Roblox? Others? Yeah, one, two, few, definitely. But
We have kids at home.
yeah, kids at home who essentially play, right? I think most of us do. I mean, Roblox. My son actively plays Roblox, and we use Roblox. The in-game currency in there, of course, Roblox can't be used outside that ecosystem, but if it were, then it's of something of value which today essentially exists, right? Kokila, same question to you, and you advise a large number of customers. What are some of the emerging use cases that you would see which will gain adoption earlier, and then the ones that will come in the medium term? And I know adoption earlier, we are thinking in 12 to 18 months, and then the medium term a little bit after that.
Right, I'm going to start with the gaming, because you can see its future, it's happening now. And in gaming, the interesting part is, now we talk about your kids, I talk about my 8-year-old, and they are already used to using a certain coin to buy, to trade, and then I see even their friends sitting there. So I always ask them, I said, they're already in the financial world. So if the technology is there, this is something that we go back to the regulators and saying, you need to start regulating this, not just looking at it as a gaming industry anymore, but this is now a financial industry. You have 6-year, 8-year, 10-year-old kids who have their Roblox money, they have Pokemon cards, and they all trade, they all do business on it. So the whole definition is going to change. Adoption is already there, and it's going to go deeper than what we can even imagine. One of the other brilliant use cases over the past, like I said, we've seen supply chain has been a huge success, and we've seen that in trade finance. Trade Connect is one of the projects that you should be proud of from the government part, but even from private parts of clients that we know. Again, Infight client, oh my god, I'm part of Infight clients, but yeah, Infight client started the whole trade finance project, and it was very interesting use case for us to see state of Victoria in Australia getting all their farmers to come on this platform using blockchain to see that how the entire process that could take 45 to 40 days could be all done instantly. So we've seen those success cases. We've seen that in use of track and trace in prescribed medication, not just in Middle East, in Africa, across in India. So we've seen those use cases which are doing really well. Again, no relevance of that to crypto so-called. Initially, all these clients thought that they're going to launch their token with it. Thankfully, they stayed away from it and said, okay, let's just focus on building the product. The other thing that we are now seeing, I still think metaverse is something that we should talk about maybe a little later, not now, but one of the best use cases in that we picked up is on education. So now the fact that I do not have to leave my house, or let's forget even about the comfort of my house, there are a large section of our population who cannot afford to go to another city or to a higher university for their education. Technology like what we have with the support of AR, VR and AI blockchain all put together in that whole metaverse space, we see really good use cases over there. And especially industries like IT is now putting in even standards for these companies, what they need to come up with for the deeper penetration of these. So, and financial definitely, as we all say, DeFi and TradeFi, we say that this is something now we will see the amalgamation. I think that will be a lot sooner. And yesterday, like we were talking about with Pranav or another panel, that we're talking about regulators like ADGM have already come out with a consultation paper on how do we regulate a DeFi, a purely decentralized financial sector. So it's gonna be soon, I think. I don't like to predict, but I would say another matter a year or so that we will see that all these DAOs, which essentially are really good governance tokens, and we're gonna see the adoption of it in the laws and regulations. Once we get that, then it's gonna be a very different governance model we're talking about. And then that true impact that this whole technology wants to create of saying that my data, my power, could be something that maybe in this lifetime I will be seeing.
Thank you, Kokila. Pranav, same questions to you, and of course from your point of view, and also you see a very large number of portfolio companies whom you actively talk with, and also people who pitch to you, right? So you have both the perspectives.
So probably there's a common thread here, gaming. So let me see if I can drill down into gaming as to why gaming and blockchain makes a lot of sense. So let's say typically if you want to make a AAA game, $500 million, maybe 500 really high quality developers, that's a minimum stake, hygiene, for you to get that out. And the attention span, as we know, is not 3 minutes, like the way Stanford research paper, etc. came a few years back. It's 3 seconds now. So that means that there is no path to monetization. I've known people who used to buy those CDs in this old PlayStation, I think PlayStation 2 or PlayStation 1, and they were like for $50. And now if you want to go for a AAA game, it is still for $50. But definitely the catchment increases. So what's happening here is that it's very complicated to get a successful game out at a lower cost, right? So $500 million, that money is not available. 500 developers, they don't want to work on these games. It's a sweatshop. So a lot of these highly successful game developers are branching off. And they are creating smaller groups, and they are using existing platforms like, for example, Unreal Engine 5, which is so advanced that practically you can build your own game with limited number of developers, right? So now, let's say limited number of developers, you can build a AAA game with limited amount of cost. That means there is a significant democratization which is happening. Now, by democratization, you also want to protect your interest as a game developer. You want to protect the interest of the gamer. You also want to protect the interest of the investor. This is only possible when there is significant containerization of the data, which is what blockchain is all about. So every block is technically, it's unique. So in that sense, whether it is an NFT, whether it is a unique block, you can always say that this is the block that all three of us have a claim on. So it creates a very direct fit in terms of blockchain sort of permeating into this. So whether it is EA Sports or Ubisoft, let's say when it comes to Ubisoft, let's say Assassin's Creed as a platform. So when I say platform, because there are multiple Assassin's Creed variants in which have come over a span of time. When you let's say talk about Epic Games, then Fortnite is a platform on which various variants of have come. So a lot of these are becoming pathways to monetization on massive scale, because clearly these game developers see that there is no linear pathway to monetization, right? So blockchain permeates very clearly, and blockchain creates that ability for monetization to happen. Now this may not play into the token economy because of regulations and other things, but definitely this plays into the NFT space completely. So blockchain very bullish, gaming very bullish, infrastructure around all of this is very bullish. The second part is real world asset tokenization, or whatever is happening from a regulatory standpoint is actually good news for a different camp. So typically, let's say if you have real estate, I'm just giving an example here. So let's say Dubai real estate can be owned by certain people, let's say maybe one person typically, from a title perspective. If you, let's say, participate into a real estate fund, then it may be, let's say, 50 people. If, let's say, it is a REIT, then in a REIT, you may have, let's say, 5,000 people. But is it possible that the same real estate, as long as the property rights are ensured, they're like local, laws are pretty robust and clear, and the codes are very clear, etc. Can that be democratized and distributed enough so that people, let's say, cross-border can also hold a small sliver of economic benefit or even the governance rights of that particular real estate? And that is becoming possible with this technology. There are banks globally. Now, even if you, let's say, look at it from a Dubai perspective, just to give a very realistic example, 2008 crisis was very difficult for Dubai. And now the thing is that how can you democratize ownership of real estate here when globally anybody who's sitting anywhere in the world can have a small right, maybe $5,000 worth. And so technically this is possible. So the point here is that as the action also shifts a little bit away from the crypto token space, this space of tokenization and securitization will also see a lot of liquidity coming in. That means that as these markets deepen, the existing assets that we have, even if these are abstract assets, art forms, etc., have a possibility of distributed ownership across the globe. So very bullish on that space. Right now, more action is happening around treasuries and bonds, which are low risk, and essentially they can be issued at a lower cost than private placement. So that's growing massively. This is a great step, and after that, as the liquidity further increases, it will grow into other spaces as well.
So thank you very much for that, Pranav. So first of all, I totally agree. So from my point of view, I see two areas. So one is payments, and it's specifically in payments is cross-border remittances, something that we see actively. There is massive, massive demand for people not to pay between 1 to 7% of their principal being taken away whenever money is moving cross-border. So for a very, very simple example, let's assume you were buying tomatoes from a shopkeeper in Oman, and you can just buy tomatoes and just drive across the border in UAE, and then you have your tomatoes. Basically, let's assume you have your firm that's making ketchup, but when you send the money, it'll take 3 days, essentially, for money to move from one country to another, right? So a simple example in terms of just at the economy level would be, let's assume your terms with the buyer is 30-day net terms. That means you get paid in 30 days after you have sourced the goods, after you have supplied the goods, but you get the money in 33 days. Let's assume you were able to bring it down to 30 days. That means the transfer to you was happening over blockchain. That means instantly it leaves the buyer's account and comes into your account. Then you're shaving off 3 days of working capital every month. If you compound it over 12 months, it is essentially 36 days of working capital, which means you are 10% more productive. With the same capital deployed, you're able to get 10% more, right? So remittance, if we are able to have faster cross-border remittance, it immediately impacts your bottom line. And the government is very interested in that because the government wants to get higher growth with the same deployed capital, right? This is the problem. The GDP growth is a question that all central banks are asked. And by central banks, by increasing the velocity of money, then they can essentially compound the growth, or they can improve the growth in the GDP. So that's something that we constantly see, which is growing in terms of the use case of blockchain for remittances. And in the medium term, like Pranav mentioned, tokenization of real-world assets, right? Of course, it'll start from highly liquid asset classes, right, which is already there, but we can get better by distribution, right? So maybe we'll start with American Treasury, which already has a very large demand, right? And a particular firm would essentially say, hey, let me bring it into the hands of more and more people, or it'll start with debt and equity markets and it'll be in full compliance with the local laws. And the reason the laws will come around that is because they would want greater liquidity. So you would have already heard of something called reverse splits.
Yes, so tokenization of real estate is one of the most classic use cases, and in all honesty, it should be the one that should have picked up. But the the problem is, as we mentioned about moving the entire land registry and blockchain is a challenge. So companies like Smart Crowd, State, these are essentially crowdfunding platforms. They were not created as tokenization concepts. And the issue, just purely talking about from a regulatory point of view here in UAE, we have limitations on crowdfunding functions. So it's limited to one SPV, one special purpose vehicle that you set up, or a BCC that you set up in the IFC where Stake and Smart Crowd are operating from, and they're restricted to one unit. So I am limited to the number of unit holders I can go to. So the scalability in purely in crowdfunding is a challenge currently in the UAE regulations. You're absolutely right that the quick fix that everybody tried to come up was to create another layer on top of it. And we said, okay, instead of getting a title to be tokenized, and from land department itself, I could have 1,000 people owning a title, structures were created, and a lot of creative lawyers worked on it and said that, okay, let's put it together as an equity structure. So let a SPV own that unit and let's tokenize that, because that's a lot easier for us to do, and I do not, and then I have to deal with only one regulator, a securities regulator. I do not need to go back to the land registry, and I do not need to get FAIR and all other regulators to get involved. Having said that, there is a lot of push from the market, and we know for sure that regulations around this will come in soon. So that's purely from the UAE law that why it has not been able to scale up really fast.
If I can add, one more part to it. Part of this is that the liquidity is missing right now in the secondaries. So you don't want to hold on to an asset wherein there's just an economic right and there is no ownership right, and don't have enough liquidity to exchange. So once the liquidity comes, that means the entire distribution system, whether it is JP Morgans of the world or existing banks, local banks, once they start participating, and definitely as Kokila was mentioning, the first stepping stone is clear regulations. And that's why the premise when I was sharing about tokenization is that whatever regulatory action is happening is a blessing in disguise. It's creating a different market wherein, let's say, the traditional finance folks can also participate. And there is a logical case for it, because right now the country level risk is not getting mitigated, right? And the company level risk is mitigated by having access to public markets, but the country level risk is still there. And essentially the world is becoming a lot more chaotic, as you must have followed the macro over the past 6-7 months. It's not expected to become simpler. So the question that will become is that how various countries can collaborate to create more fungible systems, so that in a way that at least the property rights are recognized, and there is way of creating a secondary market, liquidity, etc. In my opinion, that's a very natural step for this to happen. Maybe in the next 2 years, things should change drastically. I'm personally a big believer that a lot more action will shift from the west to the east, and Dubai is the fulcrum for that shift. So when I say action, definitely it is about talent, but it is also about capital. That means also about liquidity.
I think this topic is a very good example for how early this industry really is, because in my view, the bottleneck why we didn't see this real estate tokenization take off yet is not so much regulation or lack of capital market infrastructure. It's, in my view, pure the lack of the technological tech stack for it. As long as the real estate, the whole ownership journey, the ownership life cycle is not on chain, but there is all these friction points between the owner, the SPV, the onboarding, the transfer. This is extremely cumbersome and extremely expensive as well, because there are gas fees involved, smart contracts involved. This is not something that you can grow at scale. So I think for now, this will remain a gadget as long as we see a technology solution where the whole journey, the whole life cycle is really on the blockchain from A to Z. And then, as we said before, I think, first of all, capital market infrastructure will probably adapt because they get more comfortable with it. And then regulation will follow and say, okay, now we create a framework to make that available for a larger audience and not limited only to qualified investors like today.
As long as it stays on the second layer, you reckon it's just a gimmick?
It's nice to have. I mean, honestly, we've done it ourselves. I mean, the Tezos blockchain, where I've been involved in the past, one of our, key markets in the very early days in 2018 was we thought that tokenization is a kill wrap for blockchain use cases, until we realized that there is so many things missing apart from the technology. Also, what we said before, all these layers, and until there is no clear problem to be solved from the point of view of an investor, which leads him to buy a tokenized version of a real estate instead of, just going and buying it the conventional way, it will not take off. Why should it? And for the retail audience, this is the same thing. I mean, even if the technology would allow it, it's very hard for just making an example, for a taxi driver in Dubai just to have a wallet and to buy a small, 0.01% stake in a real estate building. It's just not there yet for different reasons. And I believe that once the technology is there to allow full transparency of the entire life cycle, as I've said, then adoption and potentially also regulation might follow. And until that, it's a gadget, yeah. I agree.
And I'll just add one more thing. In my view, possibly it'll come to a new project first. So absolutely, say a virgin project where no development has happened, and that project from get-go starts to be on blockchain, like I said, right? Say, for example, 100 acres of land, and the government says, yeah, it'll be on blockchain from day one. And then the life cycle from day one, it follows, then they're off to the entirety where liquidity gets created, buying and selling, and that just becomes a de facto place, and that becomes the way of life versus transiting something which is already in the middle and then trying to pick up pieces of it and doing it. Maybe, right. I think that seems to be a much more cleaner model and may happen with one of the developments in Saudi Arabia or somewhere else. But and that experiment at scale needs to be successful then for others to follow. Yeah, please. Other questions?
Just deep dive a little bit more on the subject and over globally, where is the most advanced in terms of the business model of the crypto tokenized the real estate property? For example, a villa in Florida, if split it by 100 investors, it could be easily affordable. And then you give each of the investor potentially like 1 or 2 days for staying, and you make it this tangible element to make investors feel it's real. And then on the other side, on the regulator side, you probably, instead of having a company to own it, because that will easily bankrupt or liquidate, high risk of credit risk, and instead of having that, you have the custodian entity of the government to ownership of this on behalf of those investors. So, and then you can trade it in the platforms such as Binance and all other cryptocurrencies. Something I was just imagination. My question really is, what is the good look like globally from the best practice, and anyone could share, that would be interesting to know.
So your question is, right now, where are the experiments happening at scale which you would see light of day? Is that your question right now? I mean, in terms of real work that is being done on the real estate tokenization.
Where can I, as an investor myself, I could just go and what are the options I, as an investor, have, and what the best practice ever historically or current ever have that you could think would, it could be real case or could be ideally what's the ideal structure of the how to make it work.
So maybe I'll take it. So here, let's say within our portfolio itself, we have a company called as Vesta Equity, which is doing this in US. And what they have done is they have just reached out to all the major brokers and built a deeper relationship with them so that they can showcase properties, and essentially also the major real estate developers as well. Now, where they are struggling, and I'm just sharing very honestly with you, the gaps there is on the demand side. Right? Because the demand side means that you need to follow the model of building a business and scaling it up. And the demand side can only come, let's say, because from a consumer standpoint, price is one aspect, right? But the most important aspect for them is that they want to go for a platform which has a huge array of products. At the same time, it is visible enough. So you need to do a lot of marketing to get there, right? So that means that the supply side and the demand side both have to match. Now, one thing which you also touched upon is custody. Custody is very important. Another portfolio company that we have, which is in Singapore, MAS has clear guidelines around tokenization of assets and issuance of securities and distributing them. So right now, because the demand and the supply side is not scalable enough, their focus is completely on tokenizing funds, which addresses a limited audience, but it's a step. So the reason I'm bringing about these two aspects to you is to say that the market is still getting there, and maybe a better way in the future could be that an existing prop tech platform, which has the demand and the supply side both worked out, also working with, let's say, a custodian who has a necessary license to tokenize individual assets or a bundle of assets, and then sort of, democratizing it. Of course, you require blessings of the existing regulator so that you can also transpose these assets and do cross-border transactions. So this is a bit distance away, but we are getting there, because it just doesn't make sense that, for example, if you look at even, let's say, GCC, or let's say even UAE, it's so much dependent upon real estate, right? And if, let's say, if something happens, let's say in terms of, like economic crisis or like the way it happened in 2008 or let's say 1997, it just has a huge impact on the economy. And this is not only about here, it is also about practically every country that real estate is a major component of the basket. So de-risking from real estate will become a drive at some point as the world becomes more and more chaotic and more and more volatile. But these are the missing pieces and these are the gaps. Of course, a startup can step in to address the gap, but an incumbent is better poised to address that gap by embracing the technology and taking it forward.
So if you look, the largest real estate tokenizations that we've seen in the late 1920s, 2019, 2020, the US particularly, or in Asia, they were all over the media. Some resorts were tokenized, some hotels were tokenized. But if you look behind the scenes, what really happened is that the owner of this building basically fractionalized it, put it on a blockchain, and owned all the token. So this was not, the tokenization in the sense of making it accessible to multiple investors. Because put yourself in the shoes of an investor. What is my upside in owning, I don't know, 0.005% of a hotel building? If it's not clear whether this value of the token is reflected in the commercial value of the real estate, there's still lot of discrepancies here. When there is no secondary market, when the question of liquidity is completely unresolved. So what we've seen really in terms of tokenization are experiments. I think they are good. You need to experiment in order to figure out what's right or wrong. But I don't want to be polemic here, but I think tokenization, at least so far, is a little bit the desperate attempt for blockchain to look for a problem, right? I mean, it's a solution looking for a problem, and it doesn't really solve one. But again, as we said before, once the technology is ready to have the whole life cycle embedded on chain, then it becomes attractive. Because then it eases a lot of problems, and then it would make sense without creating all these friction points.
Other questions in the room? Please go ahead. Yeah, no, we'll get a mic to you because there are a lot of people who are watching online. Yes.
Okay, question. Do you think crypto will replace traditional banking down the line at some point? And the other question is, the US, for example, is launching its own digital currency now. Will other countries follow? And just a follow-up question is, what do you think would be the risks associated, or is there a convergence between AI and crypto? Could there be risks associated with now the proliferation of AI in regards to crypto?
Yeah. So I'll take the first one, and then we'll take the third one, and then we'll go to the second one, right? So the first one. So what will happen is, yes, right now you are seeing companies or blockchain companies that are building on or competing with the financial ecosystem building in parallel, right? And that's the reason you can almost call it there is some regulatory arbitrage as well, whereas banks are fully regulated and hence they're tied in terms of what they do, what they don't do. But at some point, these systems will converge, right? Because think it from the bank's point of view, assuming that there is regulatory clarity, why would they not jump on the bandwagon and essentially use the technology to serve their customers better? So for example, in private banking, if a customer wants to buy Bitcoin, right? So today they sell to their private banking customers bonds, equities, platinum, and a lot of historic assets, including derivatives, right? Why would they wouldn't want Bitcoin to be sold to their customers, right? It's just a regulatory clarity, which will then allow them to essentially offer those financial products or use the underlying technology to become more efficient, right? Or in the cases where institutions will not, then they would get taken over by institutions who would be a lot more responsive in terms of technology, right? So today, what you're seeing in parallel worlds, at some point, they'll converge because banks have customers, banks have trust, banks have KYC, banks have regulators trust, so automatically there'll be great distribution vehicle for new solutions to essentially come on, and there'll be enough challenger banks if the more established ones or the ones who are a little bit older in terms of technology don't take up, right? So I think that's just my point of view. The second one, do we want to take up AI and how other technologies and blockchain would converge, right? Pranav, you want to make a comment and then we can go to
So I'm a big believer in convergence because let's say blockchain is an emerging technology. It's labeled as an emerging technology because it's not emerged yet. Similarly, AI is also a technology. Definitely generative AI is one aspect, but let's say there's predictive AI. There are multiple other aspects of AI. So the idea is, what is the purpose of these technologies? If they don't create applications which can solve for white spaces and help us progress as humanity or civilization forward, what is the point? We just don't require another aggregator application which is more efficient, right? We don't want food to be delivered to us in 5 minutes. Now it is getting delivered in 10 minutes. It just does not make any difference. No progress happens. So convergence is going to happen. There's no doubt about it. Convergence will also happen because right now the processing speed, as in processing capacity, processing cost, and processing speed, thanks to Moore's law, thanks to democratization of ownership, mobile phones, etc., has reached a certain level of point at which you can practically run power applications on your devices. So plus, for example, what happened with Apple, the kind of, the device that came out, the vision, etc. So it creates a space wherein you can, participate in an immersive experience, right? So it is AI and blockchain and many more technologies will converge. There is no doubt about it. Now, you also mentioned a nuance that, is it worrisome? Is there a threat, which can come in? Now, if let's say now this is, and I'm just sharing my view, and maybe this is once again polemic here, is that unfortunately as human beings we first misuse the technology before we start using the technology, right? So the point there is that as these technologies converge, potentially certain applications will be experimented upon which will create a large market that we don't need. But having said that, that is also a true test of this technology in the marketplace. So that's my view on what is worrisome. So that means if the governance angle can be figured out, I think what really happened in, let's say, blockchain spaces, it's not only about regulation. I think regulation comes in much more later. Can there be self-governance? Can there be things like, you can say, board meetings, you can say responsibilities, job descriptions, proper, I'm just saying, whatever is not nightmarish to the legal folks, if it can be done by these international players from the day zero itself, it just removes a lot of ifs and buts from the table. So I think those things will happen. And my sense is that, as Hubert also mentioned, that we should forgive. I think that was the opening sentence. We should be forgiving in that context, but we should not stop experimenting, because there is no way otherwise as a civilization we will progress. We'll just become better consumers and better farms. And my sense is that none of us want to be farmed, and we want to ensure that the civilization progresses. There is better impact. Our children also live in a better world, etc. So just sharing my perspective.
I would like to answer the part that you asked about, will the banks get into this space? Definitely, as Navin said, they will. And also about the digital currencies, so it's not just in the United States, globally, I think most of the countries are trying to come out with their what we call CBDCs, central bank digital currencies, mainly because, yes, they want to win this space, and this makes their whole trade, remittance, and settlement a lot easier for the banks to do, and governance becomes stricter as well. It has its flip side, but that's something that can be discussed later. And interestingly, as everyone here has said, that this convergence is happening. It's not even that it will happen, it is happening as we speak. And laws and regulations around that will take time, but the basic governance, the basic rule of law needs to be followed. And if one follows that, then one thing that we learn in law school is always that important, is that what's the intent behind? So if my intent is not to cheat and I have taken every possible measure in absence of a strict governance model or a regulatory framework, I think that works a long way for this space.
Yeah, and just to give a concrete example of how this convergence could look like, if you think about AI, one of the biggest questions that will come in the future is ownership, is IP rights of data sets that are being used, for instance, right? And I think if you combine this with the NFT technology, that might be one of the use cases that in the blockchain industry many believe could be one of the convergence and intersection points. Another one comes to the governance. There are countries in Europe who are banning ChatGPT because for different reasons. So if you can set some sort of governance layer on top that is also, powered by an immutable ledger, that could also potentially be one of the examples where these two technologies might intersect.
I've noted some of the US and UK crowd financing platform. They actually they make the company investment in the company with it's pretty much like a PE, but they give a small share to sell to an individual. But every time you have its difficulty, there's a difficulties for redeem your share and transact your share. But if you use the tokenize, that will be easier. You can basically, I'm talking about ICO. But it's even heard what you said about poverty. Poverty is actually easier for the tokenize. If you're talking about ICO, it's even more difficult because the valuation and all that. Do we have any preceding cases globally in terms of the ICO and how? And again, what is the good look like? You can share.
So we'll take this as last question because I know we are running out of Kokila. You want to take that? And
yeah. So just to clarify, lot of awareness needs to come around tokenization, especially real estate tokenization. Most of the regulators and laws globally have recognized that if a token represents a real world asset, example in real estate, the governing laws and principles will be for real estate. Tokenization just becomes the means by which it is distributed and it's get promoted. But what you need to look at is that what is the asset class it is representing. So say like you have projects which do gold tokenization, and it's not just selling the token, you're actually fractionalizing that 1 bar of gold that you have in union, and the regulators are like, look at the asset behind it. So the main struggle with real estate tokenization, strictly speaking from a legal and regulatory standpoint, has been that the developers and the companies who have wanted to come into this space have looked at it from the viewpoint of it to be like any other token or a utility token, whereas it is not. It is a highly restricted and a tough, complex real estate-backed token. So you need to look at the real estate laws of the land and then look at that, how do I go about tokenization? Now, one of the success use cases was in Switzerland was for a resort, and then they did the whole fractionalization of it. But again, it was a real estate asset that was wrapped on a token and sold. It was not just a token that could be traded or an ICO could be done. Now, those ICOs were essentially, if followed the law, were for what we call utility token, a use case token. Real estate token will be an asset-backed token. So even laws in UAE or we're talking in Europe or everywhere else, look at the asset that token is going to be. And that has been a challenge because creating a secondary market for trading of these asset-backed tokens has been a challenge from a technology perspective and also from a liquidity source.
okay, so we'll take a quick last question, but we'll be short and snappy. I hope you don't mind, right? Yes.
I am Leela, and I'm running a business for insurance broking here. And when you mentioned that this is a financial asset, it's one of the assets. So from the layman perspective, like we are investing into it, but there's also a lot of gray area, which is because so many so many currencies being launched. So is it a time where people are experimenting, even the investors, which is right, which is right to go, which is right not to go, how many exchanges are right, or which exchanges go right, are these exchanges going to remain there, or tomorrow the exchange is gone, my whole currency is gone. So from a safety perspective, so my question is on safety, how safe are these yet to be invested, or are we still on the beginning areas where we need to play around when we're investing?
In many ways, this goes back to one session that Navin organized, in the past, and which was about that if you have assets of certain value, then you need to have your wallet in place, and you need to store those assets in your wallet. So exchange is another intermediary, which is important. It's like an app. It is important for you to do certain transactions, with a lot of ease. But it should not be the place for you to get your assets, out there. It is not about regulation. It is not about technology. It is just about so many risks, which pan out in the life cycle of a business over a span of time. So let's say in blockchain space or crypto space, people say not your keys, let's say not your assets, That means that you need to have, so this is first law, in my opinion. Let's say if somebody has sizable assets or is looking at building sizable assets, you need to have your own wallet. Ideally, have a hardware wallet, much more easier, because software wallet is also technically a piece of technology out there. So you'll have your assets, with you, and you can use them wherever it is, because there'll be always another exchange, right? The second thing is that experimentation going on. The point you mentioned about experimentation, there's so many tokens out there, and many more tokens will come. And I think I agree with you. The word is experimentation, which is the right thing here, the right thing to put, because a lot of things are formative right now. Now, there is a certain amount of risk appetite that an individual will have, and which they're willing to take, and that prudence should be exercised. Now, let's say the point I'm making here is that, let's say if you don't take the risk, for example, let's just talk about Dubai, for example. Let's say when it was all desert, let's say, I'm just saying where Burj Khalifa is, it was like probably a dune or whatever, right? I'm sure everyone of you must be thinking that, let's say, who has been there for the past 10, 15 years, that wish I had bought a property there. Wish I had bought 4 properties there. I would not be doing what I'm doing currently, right? So I think it's always about risk and reward, and finding that what is it, that you can do and can take. This is a formative technology, and this will go far. There's no doubt about it, as you must have understood from the panel here. And if you stay out of this and assume that it will be fine, it will not be fine. So participate to an extent that that risk appetite is acceptable to you. So where do you participate? You can participate directly, or you can participate, with a structured entity or with a fund, etc. Because there are just too many tokens out there, too many assets out there, too many experimentations which are happening, as you're mentioning rightly. So my sense is, just if you can follow these 3 steps, or anybody else for that matter, even let's say who's on the audience, there on the video, this will help you to navigate the complexity, and at the same time, have significant and not having the thing that I missed out on something which was right in front of my eyes and it just unraveled. So I'm not creating fear of missing out. I'm not giving any financial advice, but I'm just saying a method to think about these things and progress forward.
It is going to stay.
Cool. So on that note, thank you very much, everybody, for people here in the room, people who joined us online. We really enjoyed this conversation, and we'll be here for a few minutes. If you want to have a chat, then we'll be happy to take some questions one-on-one as well. So thank you very much, everybody.
Thank you so much, Navin, Pranav, Kokila, Hubertus. I just want to call Abir, one of our charter members, and also Chef Bobby, to give a token of appreciation for your valuable insights and time.
Tokens are always welcome.
Navin will just, yeah, I think we'll keep the box, yeah. Yeah.
Just holding it on your behalf. Thank you very much.
Thank you. It's for Kokila. This is Chef Bobby. Pranav. Hubertus. Thank you. Maybe we can just take one group picture. Thank you. And if any of you want to ask questions, whether you want to keep your money in your crypto investments or thank you.